In today's world, corporate growth is often fueled by debt. Companies take out loans and access credit lines to finance ambitious projects and expand rapidly. The logic is simple. More borrowing means more growth. But what if this system isn't as beneficial as it seems? What if an economy where growth is based on ownership and real assets could lead to a more sustainable, ethical, and profitable model for corporations, communities, and the environment? Let's explore how shifting to an ownership-based economy could reshape the future of business. In a debt-driven economy, corporations have virtually unlimited access to funds through loans and credit. This system allows for rapid expansion, making it easier for companies to scale operations, launch new products, and enter new markets. On the surface, this appears to be a recipe for economic success, with more businesses, more jobs, and more services. But beneath the surface, the reliance on debt often comes with significant drawbacks. In a debt-driven system, companies are primarily focused on short-term profits to meet debt obligations. This drive for quick returns often leads to risky projects, a lack of investment in sustainable growth, and an overemphasis on shareholder returns. The result? While corporate profits may rise, workers and communities often bear the brunt, facing stagnating wages, job insecurity, and environmental degradation. One of the biggest issues with debt-driven corporate growth is that it incentivizes companies to prioritize profits over the well-being of their workers and the environment. In a race to meet quarterly earnings expectations, businesses often cut costs, outsourcing jobs, reducing benefits, and overlooking their environmental impact. This focus on maximizing profits while minimizing operational costs can lead to exploitation of workers and resources, ultimately harming the community and the environment. Rather than fostering sustainable business practices, the debt-driven model encourages a more reckless approach where growth is pursued at all costs. Now imagine a different scenario, one where companies rely on real assets and existing profits to fund their operations. This ownership-based model would tie corporate growth to tangible resources, pushing businesses to focus on long-term stability rather than short-term gains. Without the ability to borrow endlessly, companies would be encouraged to build a foundation based on solid financial practices and responsible investments. The money they spend would come directly from profits or equity, leading to more cautious, sustainable growth that benefits not only the business, but also its employees and the community. The benefits of an ownership-based economy are clear. For one, it would ensure that growth is based on actual profits, not speculative borrowing. Companies would need to generate consistent revenue and invest wisely, ensuring that each new project is both profitable and sustainable. This would reduce the temptation to take on risky, debt-driven ventures and encourage companies to focus on projects that will have a positive, long-lasting impact. Companies in an ownership-based system would be less likely to fall into the trap of expanding too quickly, only to face financial struggles down the road. Instead, growth would be more stable and sustainable, with companies better able to weather economic downturns. Another advantage of the ownership-based model is its emphasis on environmental responsibility. In a debt-driven economy, companies often pursue growth by extracting resources at unsustainable rates. With no constraints on borrowing, businesses are encouraged to maximize short-term profits without considering the long-term environmental impact. However, in an ownership-based system, businesses would need to protect and preserve the assets that drive their growth. For example, a mining company would be incentivized to extract resources responsibly, ensuring that they can maintain their operations for the long haul. By prioritizing sustainable practices, ownership-based businesses would help reduce environmental degradation and promote resource conservation. In addition to environmental benefits, an ownership-based model would encourage companies to invest in their workers and communities. When businesses are no longer beholden to debt obligations, they can focus on providing stable jobs, fair wages, and employee benefits. Rather than cutting costs to pay off loans, companies would invest in their workforce, fostering a more loyal and engaged workforce. This model would prioritize job security, long-term employment, and skill development, ensuring that workers have the resources they need to succeed. By investing in the local community, companies could also create more jobs, build stronger partnerships, and strengthen local economies. The shift to an ownership-based system would also encourage greater transparency and accountability in corporate practices. Without the option to borrow endlessly, companies would be required to be more open about their financial status and growth strategies. Investors, customers, and stakeholders would have a clearer picture of how businesses are operating, leading to greater trust and confidence in the company. This transparency would help ensure that companies are held accountable for their actions, reducing the risk of unethical practices and wasteful spending. One of the most significant advantages of an ownership-based economy is the potential for a more equitable distribution of wealth. In a debt-driven economy, those who hold assets and investments often reap the rewards of corporate growth, while workers see little benefit. As companies borrow and expand, they often use profits to buy back shares, increase stock prices, and reward executives, while employees face stagnant wages and job insecurity. In contrast, an ownership-based model would encourage businesses to focus on generating real value, leading to more equitable growth. With an emphasis on sustainable profitability, workers would have access to better wages, job security, and benefits, while communities would see more direct investment from corporations. While the shift to an ownership-based model would undoubtedly require significant adjustments, it offers a more sustainable, ethical, and profitable approach to corporate growth. By prioritizing long-term stability over short-term gains, companies would be better positioned to create lasting value for workers, communities, and the environment. The focus on sustainable practices, employee investment, and fiscal responsibility would help create a more balanced and resilient economy, one where growth benefits everyone, not just shareholders. In conclusion, the current debt-driven model of corporate growth may seem like a shortcut to success, but it often leads to unsustainable practices, inequality, and environmental degradation. By adopting an ownership-based system, companies could focus on long-term profitability, environmental responsibility, and community investment, creating a more equitable and stable economy. If you're passionate about a sustainable future for businesses, workers, and the planet, share this video and join the conversation on how we can build a better, more responsible economy for all. Let us know your thoughts in the comments below.